start. It's been a busy week with a G7 summit and NATO meeting as well, and then this announcement of the potential for a second Scottish referendum on independence.
Putin actually thought about this through, or whether he thinks about anything at the moment. But bringing Finland and Sweden into NATO, once Turkey dropped the objections there, that's significant.
Perhaps Putin's having the opposite effect to the one that he seemingly wanted to create.
That's sort of the same week that they've technically defaulted on their sovereign debt as well. Now,
well, just talk a bit about that if you wouldn't mind, Jeff. Because we're going to come on to that.
It's an ironic.
You are our presenter of the month, and joined by a couple of handsome and glamorous assistants as well. Hello everyone, and welcome back to another True Potential Do More With Your Money podcast. It's episode 124 today. And since the last episode, we've had a G7 summit, we've had a NATO summit, and the intention to hold another Scottish referendum. So lots to get our teeth into today, and we'll see what it means for your money and your investments with our three guests on the panel this week, who are Mark Henderson, Jeff Caston, and Greg Langson. Hi, gents, you okay?
Yes, good, thank you.
Good.
Busy week for you, or not?
Slightly.
Yeah, good.
Yeah, it's good.
Well, we like to work you hard, Greg. We do like to keep you busy because we know what happens when you start slacking. It all goes wrong. Mark's got his jacket off, so you're feeling quite serious this morning, aren't you, Mark?
I am, Peter. I am.
Are you ready to go?
Yep.
I was expecting you to come in riding on your horse.
No, Peter.
No, bare-chested?
Nothing like that today from me.
No. And Jeff, you're looking sharp as ever, Jeff.
Thank you very much.
Have the markets been sharp over the last week? Tell us a little bit about
not as sharp.
No?
No. We've continued just to see the volatility that we've discussed over the past number of weeks and indeed months that really we've seen since the beginning of the year. I suppose since the last time we met, probably the more nuanced evolution in markets has been what's happening in bond markets. We've talked about yields moving out, so bond prices falling over recent months. What we've started to see a little bit is a slight change in that, so bond yields coming in a little bit over the course of the week, and that's very much as markets are really grappling with this two-way flow, if you will, between what happens with inflation, what happens with interest rate increases, and what happens with economic activity. So some rising or increasing concern that activity will start to slow a little bit more, and as such bonds offering some degree of protection, starting to price in the interest rate increases that are expected, but also a slowdown in economic activity, and that's probably the most observable thing in markets since the last time we did the podcast.
Can I just get maybe all three of your views as well? Today's when we're recording this, it's the last day of June, 1st of July when this is being broadcast. So we're exactly at the halfway point of the year of 2022. What's your reflections on the year so far in terms of investments and markets and just where we find ourselves halfway through?
I think for me, Peter, I'm first of all a client of True Potential. So I love reading the comments on the YouTube channel because you get a lot of people kind of putting comments on there, rightly so, about the way the markets are and almost how are we sitting so calm and, so sometimes jovial. Well, that's just the way we are up here. We're like a bit of a laugh and a joke, but underneath I think we're all feeling it a little bit, but at the same time, talking about the longer term investment. For me, I try as best possible not to think of the last 6 months. In a strange way, I log into my client site and I actually set the date range back as for all time, because I think it's quite easy just to say, well, from the 1st of January to today, what's the performance been? But I've been invested for now 5-6 years in Jeff's aggressive portfolio, and that for me is quite important. So actually, to not answer your question, I try not to think or look at the last 6 months. I look as long term as possible, and that's kind of my approach on it. So when I see those comments about the way we're acting, I think it's a bit like a swan on the water, isn't it? Underneath there's a lot of work and activity going on here, but above that we do try and keep ourselves calm.
Well, you mentioned the numbers, and you've got them in front of you in the latest edition of True Insight, and that's there online. Anybody can see that whenever they want to. Give us the figure. What is the figure since the aggressive portfolio was launched?
Aggressive portfolio, I went in it launched 2015. I want to say I was one of the first investors. I think I may have actually been up to the 31st of March 2022, 79% returns. So that's a positive 79% return, which is it's that age-old thing we've said it on the podcast a lot of times. It's the amount of time you spend in the market, as opposed to trying to time it. And we were laughing coming into the podcast room that we'd get that one dropped in, and 5 minutes in, I've managed to get it in. But for me, that's the truth. In the time I've been invested, which for me is quite a short time. You know, we've seen invested for 20, 30, 40 years. For me, in that 5 years, what's happened? Well, a lot. There's been pandemics and everything. So
I think it's important at this stage, Peter. What Greg's reading out here is the latest version of True Insight, which looked back at the first quarter. You know, we're recording this, as you said, the last day of June. So to update the figures from there, you know, there's no hiding away from what's happened in the bond and the equity markets. And we've actually, we had a big meeting yesterday, the investment committee. We had two of our key managers in to address the committee, and Jeff and myself were part of that. And there's starting to see signs of optimism in different pockets of the market. You know, is it the start of things? Well, it could be. And what Jeff put out in the morning markets this morning, there's signs of German inflation starting to dampen a little bit, and that's going to be the trigger. If you can see a couple of months of inflation not coming dramatically down, but slowing, that'll be a catalyst. And I think we've got plenty to look forward to. You know, as Greg said, it's been a tough 6 months. There's no doubting that at all. Jeff and the team are working harder than they've ever worked before to get the returns that we've got for clients across all portfolios we had.
Do you think that's because people have understood that right now, if you're getting into markets right now, you're perhaps doing it at a discounted rate?
You are,
while
Peter.
Markets are down, you're getting more for your money. Is that the reason? Part of the reason why?
I think it is part of the reason, but I also think that there's a great deal of optimism out there, and there's a degree of confidence amongst our clients, and I think this is reflective of where the country is at the moment. You know, that we get told constantly about crisis, but if you just go out and you look around, people aren't going down, you know, walking around with their heads down, looking at their shoes and things like that. They are actually out and they're enjoying themselves, and I think that is what I see when I'm out there. I was out last night at a concert in Newcastle, and right from the start, people were up for it.
Do you want to reveal who it was?
if he doesn't, I will.
Well, I think we'll open this up to the comments. Anyone like to comment on this podcast? Maybe put your thoughts on who it might have been. We'll maybe reveal next time Mark's on the podcast.
We might do.
But you put your suggestions in. We'll see if you're as good a judge of Mark's character as we know you will be. But anyway,
but the place was bouncing, Peter, right from the start. People were there. They wanted to enjoy themselves, and it just took off. And there's a feeling around the city that you get as well.
Yes.
You know, of looking forward to the future, not looking back at what's happened. Our job is to take everything into account that we see happening, listening to what our managers, that our investment partners are telling us, and position the portfolios that way.
I think you're exactly right, by the way. My view is that Brexit started some of this on the newspapers, TV, radio, is that for 2, 3, 4 years, Brexit was the thing on the news every single night. The latest, you know, what was happening in Westminster, and it was easy. Putting together a news programme was easy because it was just Brexit, right? That then gets out the way, and then straight into a pandemic, and that dominated it for 2 years. And now we're into cost of living crisis. You know, the media are dying out on now a single issue every single night, the same thing, because it's easy, right? Whereas pre-Brexit, I don't remember putting the news on every night or picking up the paper or radio and it being the same story every single night, the lead story.
If you take the papers, Peter, the latest crisis is Andy Murray being knocked out of Wimbledon crisis. You know, and we've really, really got to move past this.
Yes. Well, they won't be able to dine out on that for...
well, it was a one-off event, wasn't it, until next year.
I think for me, I was talking to a couple of people yesterday and saying, if there's a crisis, you know, normally a place like Newcastle, northeast of England, would be hit quite hard. And I looked at a stat, 40,000 Newcastle fans were in a queue for a season ticket for 1,000 allocations. So, you know, a season ticket certainly more than the £400 credit we're going to get in October for fuel. So if people were thinking about that, that's a luxury, buying a season ticket. And you're talking.
Did the 1,000 who get a ticket go to the same Metallica concert that Matt was obviously in?
Yes. And also I was in that queue and I didn't get a ticket, Peter, so I'm not happy about it.
And by the way, that's not the answer to the question Peter posed earlier.
And I suppose the other side of that is, what do we use the word crisis to describe? It describes everything at this point in time. Whereas one would argue that, well, yes, we do have an economic challenge, but we also have pretty much to full employment in the UK, full employment in the US. And that is probably something that one wouldn't normally associate with a crisis. Now, that's not to say that things like that don't change, but at this point in time, what you have is a very strong employment backdrop with record high vacancy rates. So if there are people that are looking for work, there are opportunities at this point in time.
I agree. And crisis and unprecedented are two of the most overused words.
Yeah,
and we've just used them ourselves there, so but let's not do that again.
I think also, Peter, there's an acknowledgement that we're not looking at the world through rose-tinted glasses here.
No.
You know, we're realistic, and we understand the responsibilities that we've got. Our job is to seek out opportunity when it's there and invest and look after the client's money in the best possible way.
But the key is you need volatility to do that. You need ups and downs to be able to find those opportunities.
Absolutely. And as Jeff said before, you know, the S&P down 20% over a period of time, that does represent opportunity. But the way that we actively manage money is it's not just taking a blanket approach and thinking, right, we'll dive in here and buy, let's say, the total US market. We can pinpoint where the money goes, and that's going to be increasingly important going forward.
I think the other thing just with that is that volatility, it's an inherent part of investing. One has to take a degree of risk to earn a return. It also is important about why one should stay invested and one shouldn't seek to try and time markets, because if you look back through time, forecasting is exceptionally difficult. Trying to even pinpoint when you want to go in and out is very difficult as well. So for the end clients to try not to time it, leave that to the partners that we're working with, let them to seek out those opportunities and invest. Staying invested is crucial. If we look back to COVID and we think about pre-COVID and the recovery that we've seen, but even other problems that we've seen in markets, missing out on some of those strong recoveries can be very, very detrimental to long-term return. So staying invested, but using that and seeing the opportunity that comes with that is also
well, I think as
crucial.
Greg, you said the point earlier that you're an investor in the company that you work for. We're all investors in True Potential, so we feel it, but also we work with this man every day and Mark and the rest of the investment team, so we know them as people, but we know them as colleagues as well, so we know how hard they're working, and we know them better than most, and we absolutely trust them to get on with that job. So I agree with what you say, Jeff. I mean, we just leave it to you experts. Let's get into some of the main topics then of the podcast today. And I said at the start, it's been a busy week with a G7 summit, a NATO meeting as well, and then this announcement of the potential for a second Scottish referendum on independence. Jeff, one thing that was going through my mind in the car this morning was, if there's an interest rate rise or inflation, a new inflation figure is announced, you can see a pretty immediate impact in markets when you get those events. Does a G7 meeting, a NATO summit, an independence referendum, do they have the same immediate effect on markets, or is it more nuanced than that?
They can. I think you need to have a very specific something coming out of a G7 meeting. So if we think back to the financial crisis, 2008, 2007, 8 and 9 effectively, G7 meetings were actually very important, because that's where you ended up with a lot of coordinated policy response to the challenges that we were seeing in the global financial system at that point in time. As we have moved forward, that has been less of an impact on asset markets, because it's not dealing with a financial issue per se. Where, I suppose, thinking about this week, where you did see some impact was there does seem to be a real commitment to increase military spending. And that, as is government investment, investment's important for economies, it's also important for certain sectors of asset markets. So you did see at the beginning of the week, as news was coming out, well, we'll have to increase spending percentage of GDP. The UK, we spend about 2% of GDP on defence. You did see a number of the defence companies having a positive reaction to that. So if it's very specific, you can see that in certain areas. I think you're right, numbers or data around, like say, an independence referendum, that does feed straight into asset markets, because there is potential risk associated with that, and you see that in sterling, and we saw that in sterling this week. So I think it has to be specific, unless it's about a consistent.
And what would be the
globally.
mark, just for anybody who perhaps has missed the news this week and hasn't really picked up on it? I mean, were there any particular takeaways for you from the G7 or even the NATO summit? You mentioned there's some enlargement going on there. I mean, what were the main sort of highlights or sort of takeaways for you?
I think that for G7 and things like that, Peter, probably the announcements are so diluted by the time it comes through to us. It as Nelly said, it's not worth reading or listening to, but it is. We have to listen to what's happening with that. On the NATO side, this is topical, and it leads into one of the things that we were going to discuss today, which is the ongoing conflict, Russia and Ukraine, and whether or not Putin actually thought about this through, or whether he thinks about anything at the moment. But bringing Finland and Sweden into NATO, once Turkey dropped the objections there, that's significant. And it's probably one of the biggest effects outside of what's happening to the Ukrainian people that we're seeing now. And how this will pan out, well, let's hope if it does happen, it'll happen quickly, and it reinforces peace in the Western world at least. But there's lots of other things going on, Peter, and we can't forget what's happening on the ground in Ukraine. But what we can do about it as people sitting here is very, very little, because it's been led at governmental level. We're kind of at the tail end of this, aren't we, through petrol prices and other things going up, through inflation, and it's a circle that we've got at the minute, which central bankers are sitting at the top of. So everything that's happening with the war in Europe at the moment kind of sits with central banks, and that's the biggest impact that we're seeing on the portfolios because of interest rates and curbing inflation.
I think the other part to add to that is what does it mean for global activity and global growth, and really what does it do there? And it does bring a number of concerns, challenges to that have to be navigated through, and that, I suppose, is why there's a demand-led push to the inflation, and that, if you will, we had very strong growth coming out of 2021, and that growth was pushing prices up, and then we've had the Ukraine-Russia situation, which has curtailed supply into a strong, relatively strong demand environment. So as such, it's sort of further impetus to push prices up, and that's really the impact that we all see, whether that's, as Mark says there, on energy prices, or whether it's what we're seeing in terms of agricultural commodities. You think about wheat, things like that. Those are all areas where we are seeing pressure. Interestingly, last month, or the month of June, I should say, we started to see some of those commodity prices start to come down, which is not really talked about a lot, but the only one that continued to move is oil, so oil's in a positive sense. But the likes of wheat, cotton, copper, iron ore, they all fell over the course of the month of June. So there's some mixed signals there. You've one commodity massively supply constrained because of the role of Russia in that, be that oil or natural gas, whereas others starting to where there maybe isn't the same supply issues, starting to reduce in price.
I mean, a lot to make sense of, and Mark, I can see you mentioned the last edition of True Insight, which, as you say, was, we're coming up to the next edition, so it's perhaps a couple of months old now, but to that point, there was an article in there, I think it's the one you've got open there, where we talked around, or your team talked around, perhaps Putin's having the opposite effect to the one that he seemingly wanted to create, and you've written about it there.
We did, Peter, and the final paragraph of the article was just saying that the irony here is that as a leader, a world leader, he's probably done more to promote the advancement of alternative forms of energy. And an example of that came out after we'd written the article, when BP are investing something like $36 billion in an alternative energy plant in Western Australia, which is going to produce lots of green hydrogen for export into South Korea and into Japan. So you've got the old traditional industries which are investing huge amounts of money now in green energy.
I mean, I thought it was, I personally thought this week captured what's going on quite nicely in a way. You had the awful, terrible scenes on the TV of the escalation in the Russian-Ukraine conflict. In the very week that there was a G7, the G7 used to be the G8, and Russia was the 8th country and got expelled in 2014. And if there was a week that symbolised how far backward that country's gone, from having a seat at the table that would decide the sorts of things you talked about, to now being we can all see for ourselves. That captures it. I think
plus you can
quite
add
well.
to that sort of the same week that they've technically defaulted on their sovereign debt as well. Now,
just talk a bit about that if you wouldn't mind, Jeff. Because we're going to come on to that.
It's an ironic sort of situation. It's as much because Russia's not poor. I think that's the one thing that we have to acknowledge. They have benefited as a result of these higher oil prices in terms of their shipments into the international market, because we haven't curtailed that supply just yet. We've had to work very hard in the background, politicians that is, to come up with arrangements that allow for oil supplies and gas supplies to be curtailed. So Russia has continued to supply the market, so they're getting paid for that oil and gas. Their debt, however, they can't make a payment on it. They can't make the interest payment because they've been made a pariah in the financial system. So it's a technical default. It'll be, I suppose, looking forward, if we look forward and think into the future, as we get to the end of potentially at some point the Ukraine conflict, Russia may come back and try and tap international markets. It'll be very difficult. You've defaulted. You'll have to pay an exception.
And these were the sanctions that were part of the sanctions.
So removing it
from
Euroclear effectively makes it impossible for us in the West to effectively deal with it and for them to make payment on it. So it's very much a technical thing, because it's not like the country is bankrupt. It's not, but it's in a very difficult place from an international context.
Greg, just to bring you in as well, I mean, part of your role, you speak to many of our financial advisors, and of course they are a good sounding board for what clients are feeling, because of course, as well as the comments that you talked about that we get on our social media, obviously advisors pick up a lot of sentiment and feelings from their clients that you then pick up. What are you hearing? What's the sort of general mood at the moment amongst the advisors? What's on their mind? How do they see the next 6 months, perhaps?
I think you mentioned it there, Peter. In most cases, advisors are like clients. They, themselves are invested, but ultimately, where you have a financial advisor there, they almost feel a sense of responsibility for where they've invested clients' money. And I know from speaking to a lot of our advisors the last couple of months especially, is the thing that they've probably taken the most out of the way the markets have been is actually the information that we deliver to not just clients but also advisors. So we host a weekly webinar for our advisors to give them the latest information direct from the fund managers. We do the morning markets, we do the brochures, and actually we've got a proactive team who've been contacting advisors. So rather than waiting for, one of our financial advisors to ring us, we've got on the front foot, spoke to them to just say, do you need any information from us? Is there any, anything we can tell you to assure your clients about what's going on? But I think ultimately, and Mark mentioned it earlier, but we've actually seen a lot of business coming through. Advisors haven't buried their head in the sand. They've used the opportunities to get money invested and to get clients across the true potential. So the likes of the Impulse Save, which is the facility to top up, we've seen good numbers still coming through. Excuse me. So I think that's for me probably the big thing is our advisors haven't just sort of buried their head in the sand and gone for a month sabbatical while things sorted itself out. We have seen them get right on the front foot and plenty of activity, and to that as well, obviously we do have listeners and followers on this channel who maybe don't have an advisor. They deal with True Potential direct, and for those clients I would always just say give us a ring. The team are on hand to give you the same level of information. I think that's good. We've got one clear consistent message, whether you're a direct client, an advisor or an advised client. We're given almost daily content.
Well, I was going to say, the point you just made there was that for the many thousands of people that listen to this and watch this who perhaps don't have an advisor, presumably you just said it, but this is the moment to think about seriously either getting an advisor or giving our team a call here who perhaps you've never thought about investing before or never known quite how to do it. But I mean, we are the people, the advisors, are the people who can help with that.
Absolutely, get in touch.
Yeah. What's the quickest way to do that? Or what are the ways to do that?
Pretty much every way possible. You can call us, email, pipeline, tickets, secure message, live chat, you name it. So I'm sure the marketing team can drop the information of how to get in touch under the channel.
Yeah. I think, Peter, also it's important what Greg was saying there about the flow of information. You don't want your investment advisor to be a fair weather friend. We've got to be there all the time. And if COVID taught us anything, it is that communication and straightforward, honest communication is appreciated by everybody, because they can read between the lines. They can tell if you're bluffing or not. And there's, at this time, it's no place for a coward. You've got to be out there, and you've got to, lead from the front, which is what Jeff and the team have been doing.
Yeah. I think that's an important point, because, as you touched on earlier, Peter, it's about, looking after the assets and ensuring that they're doing the most for our clients. But it's also being able to bring that to life for them. It'd be quite easy to sit back and say, well, it's just happening there. Yeah. But actually it's about getting out in the front foot and explaining what's happening in markets, how it's creating some opportunities, but creates challenges as well, and we have to acknowledge that. Yeah. But with challenge comes opportunity. And that then ties back to the ethos of how we think and the role of diversification within that, and also the view about investing for the long term. And it is about the long term when one is investing. It's not about what's happening from week to week. We talk about it, but that's not as important.
And I think that's what makes me, if you like, so proud of this company, that we have not sat back and buried our head in the sand. And it would be very easy, by the way, to have gone very quiet, and a lot of organisations have done. But you've got in front of you true insight. This podcast itself is we've gone the opposite way.
Well, you look at some of our peers in the industry. Mark mentioned the word coward, and I think that's quite fit, and they might send clients an annual statement at best, and that's hiding behind what you're up to. Really, it's kind of saying, and even when you receive it, it's maybe 2 or 3 weeks out of date, because it's been printed, then sat in an office, and then when somebody's got around into sending out second class by post, that's what we're seeing in the industry versus ourselves. Real-time valuations every single day. Now, yes, sometimes you log in and think, I wish I hadn't, but in the main, we don't hide behind.
Or some people might think you're being a bit too positive, but as Mark said, that's not about people. We're not trying to be too positive or too negative. We're just trying to give it straight, and also and be on the front foot. Now, you talk about cowards. You can do this segue if you want. I'm not, but let's move on to Indie Ref 2. I wanted to get your view on. I'm saying no more. So we're going to have this. If I just capture this right,
we may have.
We are like the intention to have a what's called, I think, a consultative referendum in October next year has been announced. Now, there's obviously a few things that have to happen, such as Supreme Court's got to give a view, and Westminster government has to, I suppose, allow that. I'm calling it the Westminster government. I should say the UK government. I don't want to be seen to be being partisan at all.
Don't exacerbate the challenge.
Absolutely not. What do you make of it? I thought we'd settled this question for a generation. Apparently we haven't.
So I think that would be my starting point. We did have a referendum in 2014, which gave a conclusion, and that conclusion was that the majority in Scotland at that point in time wanted to remain as part of the United Kingdom. Yes. Probably the question there is, how many times can you have a referendum? That was viewed as being a once in a lifetime.
Yes. How many times in one generation can you have a once in a generation?
I've only aged a few years since then, so it's not really a generational change. So that to me says a lot. Yeah. Where that goes, we will have to see. What would we know that over the next 12 months, if not slightly longer, to that October date, could be a very interesting political backdrop. But again, going back to your earlier point, there'll be one thing then that dominates the news. It'll be that.
Yes.
As opposed to maybe many other things in the world.
And you've got a bit more skin in the game than most because you live.
I do. I live 10 miles the other side of the border, yes.
Which means you would get a vote, presumably.
As well, indeed, yes.
Okay, well, I'm not going to ask the obvious question. I think we can deduce. Mark, I mean, what do you make of it all? Is it total distraction, or the right for people in Scotland to have a view? Has the landscape changed since 2014? No. Enough for it to be warranted? I mean, just to play devil's advocate, the SNP, the largest party in Scotland, and clearly they the independence as their main mission, and she said she's going to have the next election will be a single issue election if it's not the referendum isn't allowed. So democratic sort of mandate or distraction?
Absolutely, Peter. The UK's a democracy. You said it, the right of everybody in Scotland to have a view and to have a vote. One of our Scottish members of the investment committee yesterday put it a little bit stronger, which I won't repeat. But I think it is a subject. It might be political opportunism, but I think that it's how often you can have this vote. Are you going to vote until you get the result that certain members of the Scottish Parliament want, the majority in the Scottish Parliament, and would you then have another vote 2 years later, 3 years later, to see if everybody's happy with it?
Yeah.
I think that I thought it was done with, as Jeff said there, and you said, but apparently not. But politics, Peter, you know,
I think
we could talk for hours about politics, global politics.
if you kind of take a step back from it, what do you want? You want an open and honest debate about both sides of the argument. Now, that one could argue wasn't what we saw in 2014. There is a lot of water has flowed under the bridge since then. There's a lot of activity that's happened in Scotland in terms of policy action. Has it been successful? Yes, no. I think those are the things that would be very helpful if they can be debated. Now, will they be debated is probably the next question.
Yeah.
But having an open and honest discussion about it is much more important than a political agenda that sets out the challenges of what would be there.
Timing's interesting. October next year. What's any sort of sense on what the logic of that timing is?
Not really, other than it kind of coincides a little bit with school holidays. But apart from that, probably.
I think before the really cold months come in, as opposed to the just quite cold months.
I think, Peter,
it probably speaks to the challenge of trying to get it through a court. You know, you need to give yourself a bit of a runway. It might stay in court for dear knows how long.
You spoke about 2014 there. If you look at 2016 and the vote that the UK made to leave the EU, I think if there's lessons to be learned from that, it means that everybody has to have access to facts, not political viewpoints on either side. If you give everybody in Scotland the facts and let them make their mind up.
Facts can be manipulated as well.
Well, they can, Peter, but
I mean, that cup could be half empty, but it could also be half full. They're both facts, but which one do you choose to go with? It's actually totally empty. See, facts can also be deceiving, can't they? Or just actually incorrect.
And you're the most
lies.
Yes, you can't have an incorrect fact, can you? That's called a lie, I think.
And Peter's just proved he is the politician in the room.
Oh, at least I'm not going to go any further. Any Scottish advisors spoken to you in the last couple of days about this?
Not as of yet. I did speak with a Scottish advisor yesterday, and he kind of tongue-in-cheek just said he didn't want to talk about it. He had a lot of other things to chat to me about. So, funny enough, he said he was flying into Heathrow, and he says he's going to do a little bit of house shopping down there. So that was quite an interesting one. So, I don't think as of yet. I think as the gents have said, it's very new, isn't it?
I think there's more perhaps going on right now for a lot of people than
correct.
Thinking about that. You did say at the start though that was perhaps something which could have had or did have a greater impact on markets. I mean, did we see that?
It does have an impact on sterling because it is, if you will, perceived then as a risk. What does that mean for economic growth? What does it mean for activity, etc.? That's where it manifests itself, because it can't really manifest itself anywhere else in terms of equities or bond markets, but currency markets definitely reflect those type of political risk much faster than anywhere else. Yeah.
Okay. Well, thank you for that insight, all of you. Actually, it was really good to get your perspective on the week that's been, and thanks also to everyone for watching as well. Just before we go, actually, I wanted to do a little referendum of our own. Well, a kind of a vote, and Mark will never reveal the answer to this, so we're going to have to just. We'll have to just see how he maybe his facial expression might give it away. Do we think at Mark's gig? See, I'm even using you said concert. I'm going to call it gig. Yeah. Do we think he mosh pitted? Do we think he was at the front in the mosh pit? So a referendum, a yes or no, and was Mark in or out of the mosh pit? Greg, do you think at his gig?
I'm going to go out.
Out?
Yeah.
I'm going to say in.
I would go out.
Oh, 2 outs and an in. Are you going to reveal?
Majority win.
Oh, well, there you go. See, who knows? better off out. Before we go, there is one little formality that needs to be done, and I do always enjoy this bit because I keep wondering if I'm ever going to be on this, but oh, not again. But Jeff, you are on this again. You are our presenter of the month, and joined by a couple of handsome and glamorous assistants as well. But wow, some big numbers on there, Jeff.
It's over 2,000. That's the now target for us all.
Yep.
2,000 of daily views.
Well, I'm going to give that to you, not least so you can straighten up the picture before it goes on your... You must have a few of these up the staircase now, because...
Keep building them at home, yeah.
I've handed a few to you.
Thank you very much.
There you go.
Thank you very much, Graham and Katie. Thank you.
If you could just... I'll let you just point that to camera 2, so camera 2 can get a close-up view of maybe even a still shot. So later on when you watch this back, you can take a little screenshot and then have that on your phone as well. There's your new phone homepage. Very proud of that.
Yes. Yes. More than you know.
We're all secretly thinking, when's it my turn? Right, okay, thank you very much for watching. And if you want to have never miss another beat and see the podcast and morning markets, of course, as well, all you've got to do is hit subscribe and subscribe to our channel, and you'll never miss another one of these. But for now, thanks for watching. We'll see you next time. Bye for now.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.